Well, what's going on, everyone? Welcome back to another episode here of Let It Grow Investing. I'm Jeff. We're going to try to cover all the news. I don't make the news. We're just trying to figure it out together. So don't blame me. It's been a little rough out there, but we'll get through it. And that's kind of what I want to talk about today. So we've got a lot of different things going on in the market. We've got some more AI disruption, more sell-off in the NASDAQ. We've got just problems here, there, and everywhere. So we're trying to navigate it all. We're trying to figure out why our portfolios are down, why the Mag 7 is down for the beginning of 2026 here, and really what it means for us, right? Is this going to have staying power? Is this just going to be temporary pain? What is the problem? So this is just an article here on Yahoo Finance. I was just doing a little bit of research myself because, I'm not glued to it all the time. I'm not a full-time trader, just an at-home investor like many of you guys are. So if you're a pro, you're probably looking at me like, why am I listening to you? But if you're, an at-home investor that wants to get some returns in the market, probably a great place to start. Right. So we've got, the Dow falling roughly 1.3%. They snapped a 3-day win streak on Wednesday. We had U.S. stocks turning sharply lower on Thursday. Fears of AI-driven disruption prompting investors to rotate out of technology. And as I just said, we had the Mag 7 is all down, right? And Microsoft is down the largest. They're actually down 17% on the year. Spoiler alert, that's the stock of the week that I'm going to be buying because I think it is overblown. So for this week, I'll be adding $200 of my own money into our portfolio on Webull. If you need help getting started, I do have links in the description for Webull. You get some free shares, I get some free shares, and we both stay invested. So feel free to use that. And I'll kind of delve into why I'm thinking Microsoft, right? They're all down. Tesla's down. Amazon's down. You've got the head of AWS saying that he's thinking that all this software sell-off is overblown. That is one reason that I bought more Salesforce this week. And yes, I told you last week that I had sold out of it weeks prior. So I forget the exact numbers, but I think I saved myself about 50 points of downside, right? I think I sold it around 230, 240, something like that. And I'm going to actually share this tab instead. We are looking at Salesforce being 189. So I did pick some up in the mid 180s, and we've got around 70% of upside. So there are a lot of people kind of steering us out of tech. There's people saying that AI is going to take over. That's causing big ripples through the Mag 7. So if Microsoft is getting hit 17%, you got to think some of these smaller tech plays, software stocks, are just getting obliterated. Salesforce and Adobe have gotten destroyed. I like both of the names. They're both quality names, but the sentiment around the whole market is tech is in for a bruising, if you will, right? They're just going to get hit, and they're going to keep getting hit until AI takes over. Now, is that going to be the end all be all of what's going to happen for Salesforce? What's going to happen for Adobe or Microsoft or Apple or anything else? No, I don't necessarily think it's going to be. So you've got Adobe looking at a 15 times multiple. They're a quality name, but yes, they're in the crosshairs of AI, right? AI can do a lot of what Adobe already does, and that is a lot of the fear. So people are selling off Adobe, and they're just getting pummeled, right? We're looking at 465 for Adobe this time last year, and now we're sitting at 263. I mean, not quite cut in half, but pretty close, right? So that is super painful. And yes, a lot of people that think that this thing is going to go up, but the market sentiment is just terrible for software stocks. So we got 61% of upside, but who wants to take that risk right now? Sometimes I think I'm crazy enough to do it, right? I've done it before. I'll likely do it again. I like Salesforce a little bit more from the standpoint that they're already leaning more into AI. They have the AI chatbots. They have a lot of agents that are just simply just AI right now. And I think that's going to benefit them, but they still are a software stock. So if someone else can build it cheaper, build it with more AI, cut out a lot of the people, well, they might have the advantage, but Salesforce is already there. They're already established that they're using AI. So I think that could be a safe play. So when we look at this thing, man, it's just a matter of where do we want to pick this thing up, right? We're at a 27 times multiple on the trailing 12 months. If we look at this thing year to date, yeah, we were up near 260. So when I tell you I sold it probably in the mid 230s, somewhere around here, middle of January. And then I wanted to buy back in when it got down to like 185. I mean, that's as simple as what it was. So I took some money off the table. I invested elsewhere. And I think a lot of that fear is baked in. So I'm thinking that this might be the bottom. We kind of, established this at the 12th as the low of the year. I probably started coming in maybe like Thursday after some of this downside pressure and just started buying, right? I don't know that this is I mean, you guys can see what I've got here. I don't have a ton of money in it, but $6,000. I'm down on it, and I had more of a position, and I'm slowly buying back in. Now, should I just go ahead and go all in? Well, I mean, you guys know my thoughts on dollar cost averaging and building up that base and being a long-term investor. So this is not something that I normally do. Sometimes I would ride this down 50 points and just continue to buy more along the way. But I thought there was too much in the headlines that was just pointing to the fact that this could get really, really painful. We're also looking at a 14 times forward PE. So that is getting remarkably cheap. And it's still a quality company. What do we got? We've got 74% upside here and one downgrade in the last 120 days. This is from 48 analysts. We've got earnings per share, Q1, Q2 probably trending a little bit lower, but the projections for 26 are, we're going from 1020 basis in 2025 earnings per share to around $11.76 and then $13.13. So not crazy growth, right? We're looking 10, 12%, give or take, right? So I don't see this as being an earnings price point where the earnings are just going to go through the roof. I'm looking at a stock that has had decent growth, is going to continue to turn in decent growth, and is undervalued based on that PE metric, right? So we're looking at a company that's doing okay. We're at a bad time in sentiment. We've got revenue going up around 10% for 2026. I'm down here, and 21% for 2027. So yes, definite solid growth right now. I mean, low double digits, nothing super insane. Dividend growth, they feel comfortable raising this. Yes, it's not a big dividend, but when they're raising 37% year over year, I definitely like that. I think most people like getting paid more, and a 37% raise on your dividend. Granted, it's not 37%. It's 37% increase from what it was. So if you were at $1, you're getting $1.37. It's not as simple as just we're getting 37% increase on everything. Some people get that a little bit confused. I don't know that I explained it that well, but it's an increase in the starting dividend from where you were to where you are now. So we've got 59% discount on forward PE. That's huge, right? For a company that normally trades at a 35 times multiple, we're trading under 15. That is down in like commodity stocks or even bank stocks for a tech company, right? So that is cheap. That is a cheap valuation here. We are under a half on the forward PEG ratio, right? The PEG is at a 1. 5-year average is a 2.4, and the S&P is currently sitting at a 1.7. So undervalued based on their 5-year average, undervalued against the S&P 500 index average as well. Price to sales is low compared to their 5-year average, but still above the S&P 500 index average. So people are willing to pay more than the average S&P company on a price to sales metric, but it is cheaper than where they normally trade. So a lot of different things here that still have me thinking that Salesforce is a solid company in the wrong spot in the Wall Street fashion show. What's hot this week isn't going to be tech, right? It's not going to be things that are tied to the other side of AI. If you're not specifically an AI company, you're getting punished this week, and we'll kind of delve into that here a little bit more. We've got back to where we were, Yahoo Finance. We are looking at the Dow going down to around 49.5. We did break 50,000. Investors search for clues in the sectors vulnerable to AI disruption. We kind of talked about that. We've got trucking and logistics and real estate services stocks were the latest to get hit over concerns that AI will impact those industries as well. So not just tech anymore, right? We're looking at trucking and logistics. Can AI do that better than what some of the companies that are already out there are doing, right? Looking at UPS this week, somehow the stock has gone up and the service has gone through the floor. I am waiting on packages that are, I don't know, 10, 12 days late at this point because they're saying that there's a weather delay from our storm that is to the day 3 weeks ago. So they're saying there's still that backlogged. I asked the driver, hey, what's going on? Where's the other packages? There's supposed to be 4 on this truck and you've got 1 for me. He goes, man, we are so far behind. They got drivers from as far away as Philadelphia coming down to help the Baltimore area because of the fact that they are 17,000 packages behind. And I mean, he's like, it's just been brutal. It's been an awful day. It's been an awful couple days and we don't see the end in sight. So I've told you guys I've been buying this one when that dividend was closer to 7, when this was sitting in a 80 or 90. Down here back in October when it was sub 90, I was buying this thing. I've got a covered call that's at 115 that I might be selling some shares, but that's okay. So I've got dividends rolling in from this. I had the covered call on it. It is spiking higher for some reason. I'm not too sure why. If transportation and trucking companies are in the crosshairs of AI right now, their service is going down. People are in an uproar as to why no one's getting their deliveries and the stock price goes up. So I don't always have the answers as to why this happens. But I did have a feeling that sub 100 on UPS was way too low and I was buying it, right? So we're seeing some gains. I'm good with the dividends rolling in. I like the stock, but right now it's hard to like the service. FedEx seems to have their game a little bit tighter right now. USPS even feels more reliable than UPS right now, which is super rare. But that's where we're at right now. Sorry guys, I did not share the tab. I'm looking at UPS here. Sorry. So yeah, we're looking down here at the 52-week range. That's when I was saying I was buying it middle of October. And, last March was actually 123. So maybe they have some seasonality into Q1. Maybe it's off of a strong performance around the holiday season. And now we're starting to see some of those gains. And maybe next quarter we fall flat on our face because they are so far behind. I'm not too sure. But, so me having that covered call was a little bit of protection. If this thing does go too much higher, I can get out of it. I don't know that it's going to go to 150. I don't think that's going to happen for him, right? I'm even going to say if I look at analyst research that we're probably very flat. We actually have downside. So again, I'm not so concerned about selling some of these shares at 115. I bought them in the 80s. I got some money off the covered call, and I still have like a few weeks or a month left on this covered call. So this thing could definitely go back down sub 115, and I can hold on to my shares, which is also fine. We've got this week. Let me make sure I share this one. We have different companies reporting, and I'm having a hard time here. We've got Walmart comes out. We will see what the consumer looks like on Thursday. That is what we're watching from Walmart. We've got DoorDash, Molson Coors, several other names. We've got Constellation Energy Transfer, which is ET, and SO, which is Southern. We're all looking at those as well. The market will be closed on President's Day. We've got a soccer tournament, which, I guess doesn't really surprise anyone that there's a holiday weekend that is going to be owned by more soccer. So we've got that. We've got a lot of different things, right? So we're looking at why Microsoft stock. So I actually threw this into ChatGPT. I said, why is Microsoft down 17% this year? So Microsoft shares have fallen significantly from the 25 highs. They note the decline isn't because of revenues or earnings are weak. Microsoft continues to deliver solid results, but the market's expectations were extremely high. All right, so we had this lofty aspiration for Microsoft, right? We were thinking that the web division was going to be up here. They came in here, and the market took them down here. So I I can't even tell if I'm full in screen on that one, but know that the market is definitely selling them off. AI spending. We saw this with Meta last year. With CapEx, they were looking to spend more money. We saw this with Amazon recently as well. They were saying they're spending upwards of $200 billion with a B this year on CapEx. To be the leader in all the things that they want to do, they have to spend a lot of money. 200 billion is a lot of money to be spending. Microsoft was spending a lot of money and they're getting punished for it because they don't know if the margins are going to work. That is what is going to be causing the sell-off, right? We're getting near-term margin pain and free cash flow. If these heavy CapExes will weigh on profitability before the return on investment materializes, that's painful. We've got Azure cloud growth, right? Major earnings driver. This thing cannot just keep turning in 50% growth every quarter. It just can't. Sometime they just don't go into that uber moonshot growth phase and they start coming back down, right? They get these maybe 15 or 20% growth, but they don't have these ridiculous quarter over quarter, year over year growth numbers that maybe they're used to seeing, right? So is that going to be a pain point? Well, yeah, it can be, right? If the market gets a little bit ahead of itself, Microsoft was into the fives at some point. Before earnings, it was like 450. Now we're sitting at like 405, 407. So for me, I am optimistically looking at the sentiment around this company. I don't know that the CapEx is going to be the end all be all. If they don't have the margin in Q3 or Q4, I think we start to see it roll back in next year, right? So I also think this is oversold. So the fact that people want to sell this off onto some fears, and then we get the tech sell-off fears, AI fears, all these other things kind of roll into a big snowball, and we think we can't get out of the way of it. But Microsoft is a solid company. So I would be very happy to pick up quality names at a reasonable price, right? So Salesforce, quality name, reasonable price. Yes, there's some fears there, but that is ultimately where you want to buy them, right? They're cheaper. They're cheaper than what they were a month ago, 2 months ago, 6 months ago. That doesn't always mean that it's a buy, but when you have high quality names that are able to keep turning in good homework scores, right? What they're doing is working. Did the market like it? No. Did the market like AI or big CapEx numbers? No. But at the end of the day, they're still a high quality company doing great things to be cutting edge and lead the market. So for me, it's not a real big fear that Microsoft sold off. Now, I sold off some Salesforce and I told you why. I thought there was going to be massive correction there. Microsoft, I didn't really see a massive pullback like the 17% that we had, but I probably still wouldn't have sold it. I would have likely been buying more. And I think a lot of the reason for that is the fact that Microsoft has a lot more levers to pull. I don't know that they're just in the AI crosshairs. They have gaming, they have Azure, they have Office. They've got a lot of different things that they can lean on and a lot of different partnerships that they have established to where I don't think that they're going to stay down for long. Salesforce might have, we just saw the numbers. They have a negative return 4 or 5 years. Does that mean they're going to stay down forever? No, but I'm not too sure where that goes, right? Microsoft generally turns in better numbers and they have smaller windows of the stock selling off and then moving up. We don't normally see that as much with Salesforce. There's periods where it does run up really quickly and then there's periods where it sells off very quickly. So it's more volatile. Microsoft is more tried and true, green, and I just want to be in it long term. So I'd rather own it long term than try to trade it like I might out of a Salesforce or maybe some other smaller company. So that's what I'm looking at right here. Yes, there's market rotation, tech sector weakness. We talked about that. Regulatory and competitive pressures. Yeah, we've got that. There's definitely scrutiny around AI, competition from other AI and cloud players. Is Amazon going to beat them in cloud? Is ChatGPT or Anthropic? We had that Anthropic valuation where they raised $30 billion this week at a $380 billion valuation. So there's a lot of those fears as well. There's a lot of other players coming into the space. Are they going to beat Microsoft at the game, right? That's one of the big questions that's out there. So largely down due to sentiment and expectations, not a collapse in the underlying business, which is 100% what I feel is very much true. Heavy investment in AI and cloud. Near-term profit and margin pressures. Cloud growth stabilizing rather than accelerating, right? That's what we just said with Azure. Maybe not getting these massive home run swings every quarter, every year, but still a steady growth driver for them. Broader tech, talked about that, albeit that the Mag 7, Microsoft is the big loser in those 7 stocks for this year, calendar year 2026 at this point. The market disappointed that even strong earnings weren't spectacular enough and growth prospects are as intact. Some even call the decline a buy the dip opportunity. And I 100% think that Microsoft is a buy the dip opportunity. Do you want to buy it at 550 when everything is going right? Or would you rather buy it into weakness when things are still going right, but maybe not as well as what the market would have liked? So for me, this is a buy the dip opportunity on Microsoft. I will be adding some more to our Webull portfolio. A lot of these names are getting beat up though, guys. It's rough out here. It really, really is to know what's going on. We're going to go back over to E-Trade. I mean, I'm looking at SoFi. I added this one to the 2026 buy list at $27.46. It's at $19.61, right? So there's a lot of upside there. We've got Bill Ackman selling out of Nike. So this one did trend down this week. We got around 20% of upside, but he's kind of thinking maybe that's not the play. So he was buying Amazon and Hertz and something else. I forget the third one. Amazon's got 42% of upside. Would I rather buy an Amazon or a Nike right now? I mean, that is a simple question for me. I would be buying Amazon hand over fist over Nike. And in fact, I have a covered call on my Nike shares that I bought off of a call at 62. I wrote it at 66. So if it gets above 66, they're gone. I would gladly buy more Amazon or Microsoft over Nike, especially at these price points. We've got AMD. How's that one looking? We were at 227 start of the year. We're down to 207. Yeah, I mean, down 10%-ish. Not hateful compared to some of the other names right now. But yeah, that seems like it's a lot more fair value than maybe where it was. I think we hit 250 on this, maybe end of the year, right? We were at 267. So yeah, that one's trended down. We bought NVIDIA this past week. That's probably still sitting around that mid 180s. So this one is still a solid company. The U.S. and Taiwan did meet some trade agreement. TSM is doing really, really well. We've got 42% of upside on NVIDIA, but TSM, I do believe they hit an all-time high this week. Taiwan Semi, do not own this one. I don't follow. Well, I might own some in the Webull portfolio, but I don't have a full position by any stretch. So 12% of upside. Things are still going well for them. We did hit 280 or 380, sorry, this week on the 12th. We've given a little bit back, but huge increase from last April at 134, right? So if we're looking at Salesforce or Adobe getting cut in half, we're looking at TSM doing the opposite and almost tripling, right? I mean, that's what we're looking at right now. So TSM in the right place at the right time. They're producing a lot of the things that we need, and things are going really well for them. Micron, quick check on Micron, 409. This thing has been kind of back and forth. I mean, this time last year when it was in the 80s, and I was saying, hey, you're crazy if you don't buy Micron. Okay, I'll take some credit on this one. Give me a little bit of credit. It's been just doing really well. But yeah, it dropped down into the 380s. It's kind of just teeter-tottering above and below 400 right now. We got up to 455 on the 30th of January, and then we gave like 75 points back. Probably not a hateful time to buy it. Sub 400 at this point, and maybe get some basis built in around this 370, 375, something like that might be a safer spot to buy this one. Well, let's see what the analysts say on this one. Not that they're ever right or 100%, but yeah, they're saying average price target's 398. So a little bit of downside from here. I still think in the mid 370s, I think you're okay to buy it. I'm not buying it above 400 right now until some of these numbers kind of make a little bit more sense for me as to what the growth looks like for them. That's not even one of the ones I'm looking at for this year, but just one that I thought we needed to take a look at. Microsoft, we looked at this, but around 50% of upside from here. I don't think you can lose on Microsoft, especially as a long-term hold. I think this is a great time to buy. Amazon, we looked at Celsius Holdings. Still like it. I think it still makes sense. It's been probably performing better than a lot of the Mag 7 over the beginning of this year. 45% upside. If we look at the snapshot here, we've got a stock that has come down from 56 or so. Beginning of the year, we were at 48.13. So we did have a bit of a rise in January, as you can see on the year-to-date chart. We were at 48. We rallied up to 56. So I kind of like this as an entry point for Celsius. It does make a strong argument. This PE is crazy. You'd have to dig into the numbers to see what's going on there. I'm sure. Well, yeah, I brought it up. So let's take a look real quick. Refinitiv. What do we got? We've got a buy. Trailing 12 months. PE 443. Forward is at a 31 valuation. So that looks a lot better. If you just look at that headline on E-Trade or whatever your brokerage is, and you're looking at trailing 12 months, you're probably scared out of something like this. But if you dive in and you say, oh, 31 and this thing's growing like crazy, I'm okay with that. They just had those deals go through with Pepsi. I like that. We've got Rockstar, that's going through. We've got a lot of different things that are working well for them. We've got about 42% upside on price target. 24 was kind of a slower year on earnings. 25, we're waiting on those numbers for $1.23, so that's almost a triple in earnings. From 24, that did sell off, probably due to some one-off payments, I'm guessing. And then 2026, moderate gain as well. I'm saying moderate. It's probably around 31 cents, which is 15%, 18% of earnings growth. So definitely nice there. Revenue for 2025 going to be up 79% when those numbers come out is the guess, and then 137% by the end of 26. So revenue is still growing massively by the end of 2026. So definitely nice there. We've got 58% discount on forward PE, which is quite nice to get that much of a discount. Forward PEG is a 0.8, right? So you're up there in the likes of what an NVIDIA is doing, what an AMD is doing on a PEG ratio, right? That you don't get that all the time, where the growth is just that outstanding and the PEG ratio is going to cooperate. I mean, 31 is probably a little bit high, depending on what industry you're looking at. Apple tends to be in that mid 20s range. Under 20 is probably normally a buy for Apple. But I mean, on a PEG ratio for something like a growth company like Celsius, you're probably more used to seeing something that is in that 2 range, right? You're normally looking at a PEG ratio of a 2.8 on a Celsius, and right now it's trading at a 0.8. So even cheaper than the S&P and other beverage, non-alcoholic beverages in the industry. So I do like it. I still think that makes a lot of sense to get into this one, especially when the market's trying to sell off. I don't think AI can make other drinks, right? I think maybe they can make the logistics better or the trucking side of it better, but AI is not simply making drinks. So I think that's still a safer category to get into. What else do we have? GE Vernova, one that I told you guys at the beginning of the year that I don't really know, but I kind of like the industry, right? I like the fact that they're branched out. I like the fact that, they're actually doing really well. We've got a stock that was 9 on the beginning of the year, and now we are sitting at 802. So quite a gain versus all these other companies. And industrials, energies, man, they've been doing really well. So the fact that this thing is trading at that 45 times trailing, we'd again have to take a look at the numbers. It's been gaining really, really well. I just wanted to see what I know they're in the energy, power, wind, electrification, sustainable energy. So anything energy is really going through the roof right now. BG&E here, our local electric provider in Maryland. In Maryland as a whole, the energy rates are through the roof because we closed down a lot of coal plants, and Had a lot of AI industry buy our energy, and now we're buying it back from AI contracts, and we're buying it at a rate that's, I think, 70% higher than what we were paying 2 years ago, something like that. So everyone in Maryland is all up in arms about energy rates right now. I haven't gotten my energy bill for the month, but it's probably not going to be nice. It's probably going to drain out some of my dividend checks to be able to pay for simply just 1 month of heating when it's been single digits and even lower at times. And finally, we're getting a little bit of a break. It's warming back up into the 40s and 50s this week. So that should be nice. I digress. Netflix. I still really like Netflix stock. And yeah, AI can make some content, but I don't know that it's going to replace a Netflix. So Netflix being in the 76 range, man, that is cheap. That is really, really cheap. We are right at that yearly low, 48% of upside. I was buying this the beginning of the year around 90. We bought some in the 80s. I'll likely buy some more back in the 70s. But for this week, it's going to be Microsoft. I told you guys why. And I mean, there's not much more that I can tell you about that one. So Netflix, I'll continue buying that. A lot of the stocks on this list are really, really strong buys right now for me. AMD, Nvidia, Amazon, Celsius, Netflix, even Bitcoin, right? I mean, Bitcoin's been painful. I mean, there's been a lot of talk about what the Fed's doing. I've heard some conspiracy theory. I don't even know if it's conspiracy theory about Epstein being the founder of Bitcoin, and potentially, the money was used to, fund a lot of the things going on at the island, which is sickening. And then some people were saying that if you knew who started Bitcoin, it's saying that if it was Epstein, that you would never want to get into it. So I don't know if that brought the value of Bitcoin down. The dollar brought Bitcoin down. Gold and silver, what's going on there? Let's just do a quick check on silver. This thing got over 100. It was like 109, and now we're sitting at 70 on silver on the iShares Silver Trust. This is in per ounce. And then gold for the ETF, we're looking at 463. It did get up to 509, so that's still pulled off 7-8%, something like that. Silver is a much bigger drop, and I would probably be buying more silver, except for the fact that the international IMF and hedge funds and countries around the world are more concerned with buying gold. I still think silver's got more of a way to run. So that's what I got for you guys this week. I'm not comfortable buying Adobe yet. I'm just not too sure there. Salesforce, I told you guys I was nibbling. SoFi, I've been buying some. Nike, I'm kind of sitting on my hands on that one. Like I said, I've got that covered call, and if it sells, I will deploy that cash back into some of these other tech plays that I think have sold off too far, that are high quality, high conviction, and I think they're in the right place and just in the wrong sentiment of the market for the week, for the month, maybe for the quarter. I don't know, but at some point it is going to turn around for them. I'll be there. Whether it's with the shares that I have now or shares that I continue to buy, we're going to continue to dollar cost average where we can. Stocks that make sense, value names, even if they're in the tech sector and they're normally not considered value names, I want to be buying them when they're cheap, as we did back in 22 when some of these names really went through the floor. I want to be buying them as they come back down, knowing that I don't think AI is taking over every Mag 7 stock, and I want to be there for the comeback story. That's where I'm at. So hopefully this one helped you out. If it did, please make sure you like, subscribe, and share. Definitely hit a thumbs up, and let me know what you want to talk about in the next one. Thanks for stopping by, and I guess good luck on the market on Tuesday. It will be closed on Monday, and take care.